Welcome back. I'm here with Greg Bonnell. He's the host of Money Talk Live every day at noon on TD's web broker platform. Just to remind everybody, it's a show where, of course, you bring in guests every day. They're there for an hour. People can type in their questions on web broker and you take them in real time. How are you? I didn't say how are you first.
I'm doing pretty good. That's a good rundown of the show as well and what we're up to at Money Talk Live every day.
Yeah, it's lots of good stuff. And so you brought in a couple of great pieces that you were talking to some guests and just some notable things that they were saying.
Yeah, this week, of course, we did get a fresh print on inflation in this country. As expected, that headline number did move higher, not the direction the Bank of Canada wants to see it going, and they want to see it going lower. So you come in at 3.3%. It raises some questions about what's going on with inflation, what could happen with interest rates. But one particularly interesting, I guess, detail of all this, and they've made point of this in the inflation report as well, that when you take a look at what's contributing to inflation, it's actually mortgage rates having moved so much higher. They were a big contributor to inflation, and it sort of raises an interesting question among a lot of guests about what's actually driving inflation. So take a look at this. The guest was Hafiz Norden. He's a portfolio manager of active fixed income at TD Asset Management, and right on the heels of that inflation report, he got this question. It's a good one. Are rate hikes making inflation worse? Okay, this is very on point for the day because I think if you do dig into the Stats Can release, you will see mortgage interest costs being substantially higher than last year.
Yeah, it's about 30% higher, and so no surprise given that policy rates went from near zero early 2022 to now 5%, and that's fed into mortgage rates and the realized mortgage interest costs for Canadians. So that certainly had an impact. We have to put into context, though, that mortgage interest costs are about 4% of the CPI basket. So all of the other consumption outside of that, even when it comes to shelter, rent, and there's a lot of other components. But that one component alone has been a big contributor. We're 30% higher for a 4% part of the basket. That's about 1 percentage point out of that 3.3% year over year is coming just from higher mortgage interest costs. So a big contributor for sure. I think looking ahead, though, the big change in interest costs has already happened. So I think the rate of change now from here will be a little bit less, but everybody's going to still be grappling with that higher absolute level of mortgage interest costs. And I think at the end of the day, it is, one could say that it is contributing to higher inflation, but the purpose of raising interest rates is to reduce everybody's demand for buying in other goods and services. And so the idea is to incentivize saving, and hopefully that should start to reduce inflation in the broader economy.
He's a smart guy, Hafiz, but it does seem like that self-referential kind of circular error that you'll get in an Excel spreadsheet sometimes when you're doing things where it's like, wait, I'm trying to do this to cause this, but it's causing this, so let's do more of this. So,
and it's an astute question as well, right? Yeah. I mean, it means that the viewers of the show are really getting into the details. They're not just looking at the headline number. They're saying, wait a minute, there's components here, and one of them is mortgage interest, and that's pretty much all a function of what the Bank of Canada has been up to. So it is a very astute question.
Yeah. What else you got?
We actually, interest rates and inflation dominates the conversation for investors, and for very good reason this year, but there's other things happening in the world. Tarek Ada was on the program to start the week. He's the global healthcare analyst with TD Asset Management. It's such a fascinating space because you talk about a whole host of companies, a whole host of sort of, maladies that need to be treated by a lot of these companies. So one of the guests he got was one of the questions that guest got was very interesting about developing drugs and treatments for disease. Check this one out. What is Tarek's view on the cancer drug space?
Yeah, so oncology drug space is up there in terms of attractiveness, along with obesity and diabetes and Alzheimer's. And the reason is because there's still a lot of unmet need in the space. So, just take a big picture perspective. If you look at the U.S. over the last 50 years, the number of cardiovascular deaths are actually down 20% over this 50-year period, even though the U.S. population has grown by 60%. So definitely, we as a society had a lot of progress over there, driven by statins and stents and implantable heart valves and many other advances. When it comes to cancer, however, if we look at the last 50 years, the number of cancer deaths have increased by 70%, so actually a little bit higher than just general population growth. So there's a lot of unmet need in the space, and that's going to be a big driver of growth in the years ahead. So one driver more recently have been these antibody drug conjugate. So this is basically a drug where it combines the precision of antibody and a chemotherapy linker. And the idea is once that drug attaches to the cancer cell, it would release the chemotherapy directly at the cancer site, and that way you can drive a higher dose of chemotherapy directly at the cancer site while reducing the systemic effect elsewhere in the body. So you have companies like AstraZeneca and Daiichi Sankyo going after that opportunity, and we've also seen companies like Pfizer jump into that field this year with their acquisition of Seagen and AbbVie as well, and then just more broadly across the whole oncology space, whether it's personalized cancer vaccines with Merck, whether it's other new antibody-based drugs. We're seeing a lot of companies invest in this space.
What a great question, and what a fabulous answer. Micro-targeting is so interesting that they can do that.
I learned a lot. I had never heard about drug antibody conjugate. I had to make sure to write it down because I haven't taken a science course in a very long time in my life. But that and it's investable as well. So it's a really fascinating thing. You learn about, obviously a disease, a horrible disease that you want to find an answer to, and then a way to invest around it.
Yep. You got some quickly, just some guests coming up this week, right?
Yep, we're going to talk real estate tomorrow with Rishi Sandhi from TD Economics. And then next week, these are popular segments. Brian Rogers, TD Direct Investing, their education and structures. You get a lot of questions. People want to better learn the platform. And Michael Craig is head of asset allocation. That's always a great chat. That's him in the picture right there. That's Michael Craig with me.
Yeah, people love to hear from Michael. And people love to hear from you. Greg, thank you.
Oh, you're welcome.
Greg Bonnell, host of Money Talk Live on TD's Web Broker. That is our show for tonight. Comments or questions, we'd love to hear from you. Send them to moneytalk@td.com. Thanks for watching.
The preceding paid commercial program was brought to you by TD Wealth.